Hi, Richard here from the Market Forecaster, and this is a weekly chart of the ASX 200 or the SPY on the futures, and it gives us a pretty good indication as to what the current trend is doing, which is continuing to push down. You can see here these little movements, left shoulder, head, right shoulder. The big question here is whether or not we're going to break through on this neckline. But currently we're looking at a number of markets which are actually in a primary downtrend at the moment. The big six markets, in fact, of the US, Japan, China, UK, Germany and France are all in a primary downtrend. The DAX is the only one that's not, and it's heading that way as we speak. So this is definitely a bearish time, and we don't know whether it is the full-on or full-blown start of a wave 3 of 3, which is the most powerful, but nevertheless we can see that these things, as I've talked about in the past, can be measured, and there in fact is a target around the 37.40 odd mark. On the daily chart you can see that the market has pushed down quite heavily. We entered the trade at 4428 as well as 4418. We've got two positions open. We had a retest and then a breakdown overnight. You can also see the MACD here has crossed over. This is a bearish sign. A zero crossover is often an entry for many traders. However, this particular style that the market forecaster adopts is based on a breakdown, as we can see here, of a particular trend up, and this is a classic correctional trend given the A, B, C nature of it. So whether this is the start of the wave 3 and third of a third, which is a particularly powerful one, we just aren't able to confirm that yet. It's possible we might see some support right where it is at the moment and then rally back up to take out this previous high. Nevertheless, we are short and we're staying that way for the moment. So that's the daily chart on the SPY. I just wanted to show you also the weekly chart of the Dow Jones. Now this is very descriptive in terms of what's happening now since last week's short-term update on the video. You can see the big bearish candle push down. There's 2 weeks now of slowly moving markets to the downside. We would expect a 5-wave pattern to unfold here, which was similar to this one that unfolded in here. You can't quite see it on the weekly, but there are 5 there. We've had the correction ABC back up, and this would mean that also the MACD would fail, and we would be likely to test this line. Certainly 10,000 would be a short-term target, a little bit of consolidation. Then we move into September. Of course, September is a hugely bearish month, along with October. Is a crash unfolding? Well, in 1929 and 1987 we had a similar head and shoulders pattern which precipitated. So we should be very much on the alert for a significant push to the downside here, but of course it's never a straight shot. It's unlikely to unfold in one straight line, but nevertheless we'll be looking on the daily chart, and we can see that now on the Dow, down for 1, up for 2, and we're pushing down. Looks to be impulsive at this point. Indeed, the volume is increasing. 10,000 major support. If it blasted through that, then we'd really know that a bearish move is on the cards. Don't forget the head and shoulders targets that we set many months ago now. Here's the Fibonacci value and time. The target 85.30. That's approximately 20% from where we are at the moment. So the Dow daily still looking exceedingly bearish. A short-term rally on the cards. This is the Australian dollar, which of course is tracking as well. We had the correction we talked about and forecast the dropout. When it flipped out, it moved down very solidly to the 200 moving average. We've had our second wave, down for 1, up for 2 correction, and it now continues to push down. But whether or not, again, these things don't happen in a straight shot, but certainly this is a bearish pattern, and you can see the breakdown in the relative strength index here as well. So more downside for the Aussie dollar. these patterns generally unwind very quickly to end where they began. So this target down around the 84 to 83.5 mark on the cards. Here's the euro. You can see the very impulsive move that's occurred. Again, this is the second the second largest drop in history. 2008 being the other. A serious break of the relative strength index and a really straight shot down at this point to even move through the 200 moving average. Again, we'd expect to see some sort of jump up, a retest, particularly at that 1.27 mark, which is a good round Fibonacci number. We'd be looking to see this move and continue down. And the US dollar index is doing exactly the reverse at the moment. I'm not sure that this particular, in fact I don't have a chart just here at the present, but it is doing the reverse. So the US dollar index, of course, which is now moving back up in the opposite direction. So that clearly will have some significance on gold as well. And indeed, we move to the gold chart. You can see that this ABC correction has pretty much exhausted itself at a high at 1238 by the look of it, or possibly 1237 there. We forecast it would be 1233. The break through the trend line has occurred. It's a little bit early to go short yet. We've got a sell stop in at 1215. We want it to continue down past this long tail here, and in the event that it breaks down there, and indeed the stochastic is rolling over now, showing some bearish signs, then we want to be on that trade. We want to see it track short and head down towards this support line and indeed possibly blast through it. We expect certainly some volatility in this move here, and there's no doubt, again, like these other 1, 2, 3, 4, 5 down waves and up for an ABC correction, they don't occur in a straight shot, but certainly if this support line is broken here, we'd expect to see some significant downside. Just wanted to also show you what's happening with oil, because this has a direct bearing on the energy stocks, Woodside and Santos and a raft of others. You can see that oil has really moved down very solidly to break this what we would call a wave 2 channel support. It came back up, little green candle there, retested the line from the underside. It's now resistance, and indeed over the last 1, 2, 3, 4, 5, almost 6 days, it has continued to track to the downside. So we would, in line with whatever movement occurs on the Dow or the S&P 500, we'd expect to see a little bounce here, and then a continuation of the trend if indeed that's what's occurring on the larger indice. So that's it from the market forecaster. It is a bearish outlook. We're not completely into the wave 3 yet, but certainly it looks like we're starting to get that really bearish momentum to the downside. There's loads and loads of fund managers and technicians around the world that are reporting on the same thing. I'm not sure, because generally when this occurs, when you get a lot of consensus, it generally means that one should be contrarian and look to doing the exact opposite and look technically at the chart for signals of that. But it could be this consensus that actually drives the market considerably lower in a crash-like state, because everyone's in agreement. So let's see. There's quite another week or more to unfold, but nevertheless it's all happening at the moment. So that's the sign off. Please go to themarketforecaster.com.au to see the specific charts. I'll also do some other videos relative to the industry sectors such as financials and energy, as well as gold and the gold stocks.